going to talk about the financialization of NFTs. Happy to welcome the moderator, my fellow CoinDesk reporter, Tracy Wang.
You guys can come on stage. So good afternoon, everyone, and thank you so much for joining us. We have another wonderful panel about NFTs, and I will quickly introduce our speakers. We have Will Quigley, who is the co-founder and CEO of Wax, and also Tether, fun fact. But Wax is a NFT-specific blockchain. And we also have Halsey Huth, who is the head of growth and partnerships at MoonPay. All right, so our panel today, we're going to be talking about financialization of NFTs. And the first question, there's just been a lot of different narratives in crypto. And for example, programmable money, store of value, and crypto as payments. And so a lot of different financial use cases. And so, before we delve specifically into NFTs, if we were to just broaden the topic to all of crypto, what do you see as like the key financial use cases for crypto?
Sure. Well, 100% that would have to be stablecoins initially. Stablecoins are the circulatory system for all of crypto. And it's why everybody in this audience who cares about where crypto goes should be interested in what the US Congress is contemplating doing with the central bank digital currency. And it's because Tether now, but maybe other tokens later, is almost more important than any other crypto, maybe even next to Bitcoin. 50% of all Bitcoin trading pairs and most of all crypto settles against Tether. And the reason is because most of the profit taking on the centralized exchanges involve arbitrage. And in order to successfully arbitrage, one side of the trading pair has to be stable. Otherwise, there's no way to calculate your profit. So this is why Tether is the most traded crypto on Earth. I think right now we're around 30 trillion US dollars annually. And so where go stablecoins, so go all of crypto trading. And I would even go as far to say it would be very hard for the financial markets, traditional financial players, to get involved in crypto without knowing there's a safe harbor token that they can go into quickly, getting in and getting out of. So that's just weighing out there until the governments of the world decide if they're going to allow private stablecoins.
And I think one of the things that you mentioned, payments being one of the things that people like to talk about, you still do not see a huge amount of people that like to buy things with their Bitcoin. But as you start to see the proliferation of all these different stable coins where people might be yield farming and getting those gains, and they don't think of it as a investment asset, they actually look at that as their personal cash flow. And then that's when you start to see them actually using stablecoins to pay their friends, actually take their salaries on a monthly basis in USDC or USDT. But there's still not a ton of people that like to, in the e-commerce world, purchase things with their cryptocurrency. If you do look at what people are purchasing with their cryptocurrency, that's where you start to see the proliferation of NFTs. But yeah, watching what the US is going to do, it's going to be very, very interesting to play out. I don't think we're going to spend a ton of time talking about Terra today, but definitely makes it interesting.
And yeah, so that point that you just made is so critical. Despite what Elon Musk thinks, no one's going to be buying anything with Bitcoin or with Doge, right? You're going to be paying for these things with stablecoins because merchants don't want to accept payment in something where instantly the volatility might have wiped out the profit from the good they just sold. And in the US, if you're a US taxpayer, every time you use a crypto, you have to report either a capital gain or a capital loss. Can you imagine every time you buy something, you're reporting capital gains and losses? So this is why stablecoins ultimately will be what drives the payment space for guys like you, MoonPay.
Thank you. Another new trend that we've kind of seen take off this year is the financialization of certain everyday activities. So stepping to earn, games like Axie Infinity where you are playing to earn, which a lot of people in the Philippines and Venezuela are doing, and that's kind of their full-time job even. And so this whole broader category of fill in the blank to earn. What are your thoughts on this new trend? Are we going to see, sleeping to earn, eating to earn, and the various spin-offs? And, are these a fad? Are they useful in terms of mainstream adoption? And I guess we'll start with you, Halsey.
Yeah, so programmable money is where we are. And so something as simple as like Step In or Sweat on Near that everyone hopefully saw around here. They're pink. It's an action that you go and do, and now we have the ability on-chain to actually reward people for the action or the activity that they took. And so anything, basically think of it like API triggers. You have not just like play to earn as in like the video games, but you can go and build it out where every time you go and listen to a podcast or listen to a song or watch an ad or watch a movie, that you can actually get rewarded in whatever kind of like network or protocol token that you have there. And it's a really, really good way to incentivize that activity. And now in like our wonderful Web3 world, we actually have that programmable money building blocks for people to go and launch things like Step In.
Yeah, and I would say all of these things, if you want to talk play to earn in particular, they require liquidity. And that is what is missing today, because if you're going to create a reward token or a play to earn token, it's great for the early participants. But in the end, in order to drive liquidity, someone needs to be buying those. Otherwise, you can't sell the reward. And what we've seen in almost all, pretty much everyone I've looked at, of the play-to-earn models is a gradual reduction in the price as more and more people playing decide to use that token to exchange it for something else. So I think we're in this mid-period now where that particular model, and Stepin would be the same way, you need to find a reason for why people who are not using that particular application would want to buy the token. And I don't think that has been innovated yet. I don't think we've seen it. And that's the reason why these giant yield gaming guilds that have people in the Philippines and Brazil and Indonesia are making all this money by playing those things. They almost grind the thing down to oblivion when they do that, because they're immediately capturing those tokens and then dumping them. And as anyone in the crypto space knows, if you have a substantial number of holders dumping, your token collapses. So we don't yet know how to get people to not want to just dump those tokens. And that's, I think, there's a lot of good ideas, but that'll be over the next year if we have a solution, what causes those types of things to come back strong again.
So you've seen different growth cycles for a lot of these games and a lot of these apps where, through quarantine, like Axie had this like amazing story of like helping people that could not go and do their regular day jobs. But over time, as you start to get these basically like corporations, the gaming guilds, that they go and basically farm out teams and set up like operational units where people just play the game day in, day out. The regular user, like the person who just decided I have free time and I would like to play a video game, it became less attractive for them, and so the whole like play to earn mechanic kind of lost interest for them, and that's why you just see like the gaming guilds as the ones that are left, because as you do have those groups that are kind of pushing the price down, the average user wants to spend like a little bit less time because they're no longer getting that like financial incentive reward. Because we need to remember we're talking about video games, and people have the choice to spend their time where they want to. And so when that like financial incentive starts to get less than the enjoyment that you actually get from playing the game, you're just not going to care anymore.
Yeah, play to earn is a bit of a misnomer, because the play part is lacking.
I think some cynics have called play to earn some equivalent of digital serfdom to be the extreme fudsters. But while we're on the topic of gaming, so right now gaming is definitely the hot sector within NFTs and even crypto. We've seen hundreds of millions, perhaps billions in venture capital funding, and everybody is touting gaming as this new way for crypto to gain mainstream adoption. You just talked about how play-to-earn models are what it sounds like unsustainable, and we're kind of seeing that with a lot of the token prices for these play-to-earn games. So is there a way gaming integrates, how can gaming integrate crypto if it sounds like both the games are not extremely fun to play, and now the financial incentives for playing the game are a lot lower?
Yeah, so when I did Wax, we did it because we were running, if people know what a skin is it's a video game virtual item that has no in-game utility. It's strictly for cosmetic value. And I ran the largest skins marketplace called OpSkins. And OpSkins allowed you to take your skin from your game and sell it for real money. Now, it worked because those games were really fun. And people would play them even if they didn't win a great skin. And if they wanted a great skin, they might go buy it on our marketplace. So in order for gaming to incorporate crypto, the crypto it's going to incorporate really needs to be NFTs, not the in-game currencies. And the game needs to be fun. You need retention. You need at least, an average, a casual social game has a use arc of about 90 days. So you can't put a lot of money in something that ends in 90 days. MMORPG, big game, you put 100 million in, you really need that to be played for 3 or 4 years, people to really be into it. So this is where the industry needs to go. We need real gaming expertise, and the beauty of an NFT versus a traditional in-game item is you're not allowed to trade the in-game item typically. The games prohibit you unless you're sneaky. On Apple and Google Play, you are not allowed to ever trade those for real money. So NFTs allow you to do something you can't do anywhere else. But I think it has to be NFTs, not the in-game currency.
The amount of pitches or presentations that I've seen, just even over the past few months, where the word fun is nowhere in that game deck is really, really surprising. And as you've seen a bunch of these, we'll start with the PFP drops to lead into a video game. And I have no idea who came up with this, that you can actually go ship a playable video game inside of 9 months, because you can't. And it's everyone kind of forgot that we are here because we're starting with a video game and not because this is a cool financial incentive. And so if you start with the game first, instead of starting with the crypto primitives, that's where you're going to start to see the actual success here.
That's right, yeah.
Just to follow up, have you guys spoken to, I guess, major traditional gaming companies? What are their thoughts on incorporating crypto to their existing games that seem to be well beloved and fun?
Yeah, so it's painful. I started talking to traditional game companies in 1998 when we first started trying to trade their in-game items. And what I learned about video game companies, it's probably true of all big companies, they all claim to be capitalists unless they can be monopolists. And if you have a game and you control it, you basically have a monopoly. They do not like people to trade their in-game items. And if you do trade them, they want all the profit. So this is anathema to the AAA title video game companies. I don't think they will ever incorporate NFTs in the way people here think of NFTs. You own it. It's not for entertainment uses only. You own it. You can do what you want with it. You can take it out of the game. You can use it in other games. That will never happen in the big video game businesses because it's inconsistent with their business model. And so I think you saw Ubisoft say we're going to do NFTs. NFTs don't come with 2 pages of restrictions, which is what they had. So those are just virtual items that they're labeling NFTs. And I would say everybody needs to, when a big video game company says NFTs, really say to, like, okay, anyone can use that name, but is it really what it is that we think of when we think of an NFT? So I don't think they're going to incorporate them in the way we think of them.
So there are definitely a ton of conversations happening, right? People have assembled teams, their own internal Web3 divisions, and it's fun. We get to speak with them every handful of weeks to check in and see what's going on. And yeah, they are very interested in doing something within NFTs, but it's not like we are now taking World of Warcraft and every item you've ever had, you now actually own the stuff that sits inside your bag. That will never happen. They have no intention of removing the stuff that has worked so well for them for the past 2 decades. But they want to play in this because they do recognize that, okay, when we talk about the metaverse as well, it's not just like the actual 3D world that you are roaming around in. It is like everything that has to do with that game, with that community. So like Warcraft ends up being like a pretty good example for this. There's activity that happens inside like Warcraft's community of users that doesn't happen in the game. And so if you bring NFTs into some other kind of function outside of that, it can work without changing the entire dynamic of the actual video game, and then like incentivize people or reward them to actually do something involved in the Warcraft like universe outside of the video game.
Interesting. To just piggyback on these incentives, so back to NFTs, currently it seems like a lot of NFT volumes are driven by these 10,000 cute animal profile pictures that are very popular on OpenSea. But as with most things in crypto, as the asset class matures, people come up with more degen ways to make money. And so, I mean, the panels about financialization of NFTs, we're seeing a lot of that now, kind of the intersection of NFTs and DeFi, whether it be fractionalization, staking, NFT projects launching tokens, and basically trending towards NFTs as yield-bearing assets rather than just aesthetic pieces of art. What are some of the most interesting kind of experiments in that category that you're seeing?
Sure. I think you have to think of NFTs if we want to. This panel is about the financialization, which I think is useful because NFTs were introduced to everybody as pretty pictures incorporated in a token or a video snippet or a piece of music. So NFTs, that is an application of NFTs, but NFTs are Turing-complete computers. They're programmable computers that you can transfer simply where the underlying source code can't be altered. Any spyware, malware can be inspected. That's what they are. So NFTs are going to be almost in every industry that exists, wherever software exists. And when it comes to what you can do with that, well, it's limited only by your imagination and what software can do. So a big opportunity will be in lending, but first we're going to have to solve this almost intractable problem of how you use an NFT as a form of collateral. And I've been thinking about this problem for like 5 years, and the answer still is not obvious. And all other things in the world that are used as collateral their value can be easily assessed. Things where value cannot be easily assessed are generally poor forms of collateral. And yet consumers are going to have NFTs, digital twins of almost every consumer product that they own in the next 10 years. So there'll be a digital stock certificate, if you will, of your assets, which sounds like an incredibly good way then to use for some personal finance instrument like collateral for a loan. But first we have to figure out that problem I just mentioned, how we get it. So I think those are fascinating projects, and I look at all of them, but none have really passed the test yet for me to be comfortable enough that people would be willing to back those with loans.
So you're right, very, very exciting projects kind of coming to the forefront with the ability to take out some kind of liquidity on the CryptoPunk that you bought for $500,000. That also gives people a lot of kind of heartburn. You have what looks to be like a very, very volatile asset that someone told you is quite valuable. And being able to take like USDC or USDT out against that super volatile asset gives people a little bit more comfort in what they're doing. But you haven't been able to see anyone do it at scale. And it's also not applicable to like every NFT and every blockchain and every project. A lot of the NFTs and assets that you see kind of hit that early hype cycle where people want to jump into the whitelist and see if they can like ride the floor price. A lot of that is like value that is not actually ascribed to the piece, but more like the momentum of the project. And so when you have a bunch of these decentralized like lending protocols that we'll be picking random like metadata information and like historical transactions to figure out, hey, this is what this piece should be valued at right now, is really scary, because who says that the valuation metrics that they're using are actually right? Like the value of art is like, what's the phrase? Like beauty is in the eye of the beholder, or value is in the eye of the beholder. It's only going to be worth what someone is willing to pay for it. And if you don't have that person that's like willing to spend that liquidity, very difficult to then have these lending protocols where people feel safe that the asset that they're trying to take collateral out against is like what it's actually worth. So it's kind of scary, but very excited to see them actually like come to the forefront. Like really, really excited about what the team at like Arcade.xyz is doing, because their stuff actually works. But yeah.
Yeah, that's a great point. And I think sometimes people forget that NFT actually stands for non-fungible token. And it was actually one of the early narratives about NFTs is that this is some unique ERC21 token. It is one of its kind. It's not fungible. And then with the financialization of it, people are actually trying to reverse it and exchanging their NFT for like USDC and
when a good game is going, we had a game on Wax. It escapes me. It was like Farming Tales or Farmer's World, but a excavator, like a tractor NFT, which was a little object that you would use in the game to extract resources. Those things went up to like $100,000 because you could make about $6,000 or $7,000 a day using it in the game to extract the gold in the game, which you could then convert to some token. But the yield of that only lasts as long as the game is popular, and before you have these problems we talked about earlier, where liquidity becomes an issue. So there may be at some point real-world assets that get tokenized, and those are unique assets, and therefore they're in the form of an NFT, and you would pledge that NFT, but backed by that real-world asset that is more easy to ascertain, from a valuation standpoint.
I think it also like opens us up, like the whole financialization of NFTs back to like programmable money. It now lets us bring regular gaming mechanics that people are used to, like you completed this level, this is your reward, you got to this point on the map, and here's what you get access to. It lets us actually like code in those gaming mechanics on chain. And so that's the kind of part of financialization of NFTs that I'm excited for. But then the back end of that, one thing that I'm be very interested to see where it goes. But like fractionalizing NFTs makes it very nice, kind of lowers the barrier of entry, does get some kind of liquidity on that. But having 10,000 people actually all jump into like one Bored Ape and think that this is like the best like investment decision that they made today, don't know if that's necessarily true, but it does open things up.
And now moving a little bit more away from the financial engineering side, NFTs right now, they have been really, really successful at creating demand. Everybody wants to be on these whitelists for these hot projects. And they're also really good at curating, very passionate online communities, whether it be Discord groups or Twitter communities. And like, Is there a way that these NFT brands, and I think we're starting to see some of that with Yuga Labs and the Bored Apes, how can they monetize these their NFT IP outside of just the standard royalties that they collect? So
Well, I think-
bringing in outside cash flow.
Yeah, it'll be a challenge. I used to be at Disney licensing, and Disney's the world's largest licensor of consumer content. And the staggering amount of effort and curation that went into the Disney properties in order to make them desirable globally so that people would want merchandise with those characters on them is no easy feat, right? Intellectual property management is incredibly challenging. Now, it just turns out there's that opportunity in NFTs because something I didn't really think would happen with NFTs is that I'm going to guess 95% of all NFT revenue ever generated has come from original IP, original content created by startup companies. This is not Disney stuff. And so it will take these companies having to learn how to manage those things, but they're all going to find you have to be incredibly careful and a good steward of your brand. And if your venture capitalists are just saying, do another drop, and everyone's buying it just to speculate in it, it's going to go down fast and you'll ruin it. And the challenge of the NFT space is that it does appear that a large percentage of people like the kind of price volatility aspect of it, as opposed to, oh, there's a cool PFP that looks like me and I want to keep for that reason. So a lot more work needs to be done on IP management. It's not obvious. I mean, on Wax, there's at least, there must be tens of thousands of NFT collections. The same for Ethereum. And the vast majority of those are kind of, here today, gone tomorrow. It's very few that can really stand up over time. And over time is, even now, Yuga Labs has been around a few years. So I think, though, that they'll have to borrow a lot of the brand management techniques that big established companies in the non-NFT world have done.
So you've seen groups come together. We can use Azuki or Bored Apes as examples. The actual holders of the project will kind of band together and decide, hey, we can use our NFTs that we own to go launch like a coffee company or some kind of their own TV show, right? You saw that with Kingship coming out. So it allows them to get creative and try to take the IP that they now own the rights to and go do something with it. The financialization aspect of this, you can go and kind of rent out your ape. Let's say someone wanted to launch a sneaker brand with it and they wanted to use your specific one. You can set it up where you kind of loan it out to them and now you get paid on that, like a licensing deal, but something that happens in real time. But you're also talking about people creating products, and just because you have your ape sitting on the packaging for the coffee doesn't mean that people actually want to buy the coffee.
That's quite interesting because last month I paid a trip to the Bored Ape Yacht Club restaurant, the burger joint, and just as some undercover reporting. And the IP is on the the fry box and the soda can and the little plastic burger holder, and there would be some people asking to just get the burger holder so they can have the ape on it. But the owner said, no, you must have a burger and fries with it.
Yeah.
We only have a minute left, but very briefly, I know we have some whales in the audience, and kind of NFTs haven't attracted that much institutional attention just because of the scale. But with financialization, there is opportunity for derivatives and also, just making index funds, tracking NFT prices. What's the best way for smart money, institutional investors, or brands to get involved in terms of investing in this particular asset class?
Well, if you asked about entrepreneurs, I would say the best way to get involved in anything is to build it and then to operate it. And then you really understand where to put your money. For big companies, it's almost certainly they should first partner or participate in the existing set of NFTs before they try to build something in-house and launch it themselves. I think that would be way too much effort. So you should start seeing a lot more brands. You know, we launched Wax Pack Topps baseball trading cards, which I think took way longer than it should have, but Topps then understood, okay, these are digital kind of trading cards that now will live forever on a blockchain. So they should be partnering with smart people who are already doing it, would be the best way.
And then on the direct investing side, there's always going to be inherent risk to making any investment. This is not financial advice. Everyone do your own research. William and I are not lawyers. But the picks and shovels and the infrastructure groups, people that are companies that are playing in the NFT space that actually generate real dollars instead of crypto cash flow, investing in those projects is definitely going to be a safer route than trying to go whole hog on the genesis mint of the up and coming derivative project off of another project. You have seen some kind of index funds and kind of an exposure come out that way. I would say for people who don't feel comfortable going and looking at NFTs and actually being a operator investor, actually getting involved with the project, talking to the people, and not just throwing money at it. Investing in someone who will spend that time to go do that and have that be your exposure to it, I think is a lot safer than trying to just go it alone and snipe out projects or specific pieces that you think are going to be investment grade.
Got it. Thank you. Well, we are out of time. Thank you all so much for joining. Let's give our speakers a round of applause.